Good morning, welcome to the Phoenix Blue update on Wednesday the 16th of November. I'm Tom Colley and I'll talk you through the markets and the news this morning. Yesterday was a somewhat volatile day within small bands of movement. We were at our boot camp yesterday and we were looking to try and take advantage of the early stages of a dollar pullback, and we got some signals to that effect. Got in some trades, low risk intraday trades, and then subsequently we had some news come through that brought back in some dollar strength and took us back up to the highs. We'll have a look at those charts in a moment, but let's just have a quick look through on the news. Yesterday we had German preliminary GDP disappointing, coming in at 0.2% versus the forecast of 0.3%. We had the pound CPI. This is year on year, so it's the most important of the CPI numbers. We saw a slowing in the rate of inflation on that basket of goods. Previously, we'd had a 1% inflation rate, forecast at 1.1%, and we came in at 0.9%, which created a little bit of volatility in the pound at that time. That it later overcame. Nothing very significant came out of the inflation reports hearings. In one context, that number probably helped Mark Carney and his concern about inflation getting out of control. But obviously this figure only allows for about 50% of that year period being, should we call, the post-Brexit scenario, probably even less than that. Then we had what somewhat upset our dollar pullback scenario yesterday. We had very good core retail sales and retail sales coming in from the US. These were up 0.3 and 0.2% respectively, over and above the forecast, and was seen very positively by the dollar. Have to be honest, we were conjecturing how sensitive the dollar would be following the big news of the election to these numbers, but these were significant changes. They weren't just, your 0.1s and things like that. So we did see a move on there, and as I said, that did take us out of our some intraday trades, but it also put an end to our plan for the day, which meant at that point we stopped trading and looked forward from there. We had the GDT dairy price index for New Zealand. The New Zealand dollar seems very subdued at the moment, potentially because of the earthquake scenario. Nothing seems to have played out into the markets about that. I know it only caused a limited loss of life, but the infrastructure damage is significant, and we've seen these retail sales numbers, which are marked in now tentatively for this afternoon, and PPI. These numbers, like a lot of all the other data coming out of the New Zealand government, have been postponed and delayed whilst all the focus is on those. So we will expect in the near future to see the financial effects of the earthquake play out in the Kiwi exchange rate. Okay, what have we got to look forward to today? Well, we've got claimant count and the average earnings index for the pound. I think it's going to be sensitive to this because this is Brexit related. We've then got manufacturing sales and PPI for the US. Will we see the price of finished goods at the factory gates increasing strongly like the retail price index, or will it actually be non-goods items, i.e. overheads, mortgage costs, things like that, that are driving that inflation on that side? We've then got the crude oil inventories. We'll look at the crude chart in a moment. The crude oil inventories will be significant in themselves, but there's a lot of news flying around over an OPEC agreement before the end of the month. We'll talk about that shortly. Overnight then we've got Aussie employment and unemployment rate. The net result is, here at Phoenix Blue, we're now very much waiting for a more significant confirmation that that we are going to see the dollar pullback, which we still expect. We were using signals which were yesterday were intended to be very early indications of that pullback. That significant retail sales data put an end to that, so we will not be looking at those same sort of indicators. We'll be looking for more significant price action indicators before we look to try and take any advantage of that dollar weakness. Here is the US dollar index. As you can see here, we have yesterday we made a new high close above 100, and we're seeing a pullback now this morning. But as I've said, we've tested that scenario. It was unsuccessful, and to try again would be risky. Even those were low risk intraday trades. We'll now be looking for a more significant move, but we still see price into around this 98.50 level if it comes through these highs here, as being a pullback which we're looking to correlate with other markets. Over in Japan, the yen similarly pulled back with the dollar weakness in the early part of the day, but then it came through on the dollar strength and really outperformed the dollar and made a significant new high and a new higher close. And you can see today, relative to that dollar index, it still is looking relatively bullish. That's interesting. I quite like the look of that because I like this level through here, which from yesterday's high for the pullback we're looking at to correlate with the dollar index would mean relying on this level down here, which I'm not as keen on. It's a decent level, but that level through there is significant. It's a long-term level, so that being about the 106.50 level there. So a further move through here to the long side before the pullback will make that level a lot greater possibility that will be the level that it will turn at, and that's where we'd like to see it turn. Over on the euro, basically really as we would expect, a reflection of the dollar index. We didn't get a new low, we got a new low close. We've now got what's a bullish bar, so starting to reflect the pullback that we would expect based on our pullback on the dollar. Over on the pound, we had some news through yesterday we've already mentioned, and we were looking for opportunities to get long this market again. That was based on the dollar pulling back, but also the pound is by far the second strongest currency. When the dollar was moving post the election in the States, it was the pound was the only currency holding its ground, not weakening to the dollar. So we are seeing strength in the pound. We particularly like the euro pound cross pair once we get this dollar pullback over with, and we see more downside again to the euro. We see the pound being undervalued relative to the euro, so we'll be looking for potentially longer term trades to the downside there. There's renewed talk of parity for the euro US dollar for next year. Crude was an interesting trade or chart yesterday. We saw a real strong move here to back to the long side. We were looking at levels through here to trade. It just shot straight through there, predominantly on the probability or the news coming out that what the markets appeared to have almost given up on, which was the OPEC agreement to limit production. We're now seeing news saying the OPEC members are working and having meetings, travelling around between the countries, trying to put together this agreement. We've seen this before. It's more positive, potentially positive spin. The markets reacted on spin or on that information. I'm sceptical. We're sceptical that the agreement will come into place. But it's what the market thinks and what we're trading. We're at a nice level here. It's technically a nice level, confluence with that trend line, pull back to there. early states of today's price action suggest we, the price is asking questions at that point. We will potentially be looking for intraday trades to the downside at low risk in this market. We will be very focused on, I think it's the 330 crude oil inventories this afternoon, because we'd want to be either waiting post those numbers or to be in our stops at break even, money off the table ahead of that, because that's clearly an unknown. But technically that's such a nice level. If we get the OPEC agreement, which is due to be announced one way or the other, a meeting on the 30th of November, that will clearly move the markets in one direction or the other. But we do have the risk that day-to-day news will create volatility for us there. The other side of oil, we've obviously got the Canadian dollar coming down into a nice technical level here. Again, because of the dollar pullback, this is something that we'd only be looking for low risk price action oriented trades at this level. The dollar, if the dollar's pulling back, we could see pullbacks to this level or even lower at this at that stage. A bit of a shame the timing on that, because that's such a nice level, but we will be focusing on that, but being conscious of where the dollar is, but also conscious of the oil price. We saw that pullback yesterday, which was generated by the big move, 2% move in the value of oil. We would be looking for that move, or we were looking for that move without that oil news. So we're cautious in these markets. We're cautious in all the markets at the moment. We're only trading small risk, and we really want the elections to wash through a bit more to get a clearer picture of how the markets interpret and judge what President-elect Trump is suggesting. Okay, guys, so a day for caution out there, and probably a week for caution, but opportunities potentially there intraday. Do take care. One thing to mention here, we're in Norway next week. If you're interested in finding out how we trade, you want the opportunity to trade alongside our Phoenix Blue fund managers for 3 hours, please just go on the website. You can actually book for this event on the website, or simply email us at info@phoenixblue.co.uk if you've got any questions whatsoever, and the guys in the office will be to tell you exactly what the schedule is over there in Norway, because I think it's recently been reorganised, and there may be more than one event and more than one location. So please get in touch with us if you're in Norway, and we look forward and hope to have the opportunity to talk to you when we're there. Okay, guys, that's it for today. Have a good day's trading. We'll speak to you in the morning. Goodbye.